How does it look for this month?
You know, Cindy, it looks much better. This our leading economic indicator rose to its highest level since before the recession began. And so this is some really good news in there for this leading economic indicator, which comes from supply managers. And as you and I have talked about before, supply managers, these are sort of the canaries in the coal mine. So if they're seeing good things right now, then we in the broader economy will see good things in the months ahead. So it was a quite unexpected for me increase in the number. The number was actually well above growth neutral, actually into the 60 territory. And of course, 50 is growth neutral. 0 to 100 was 50 being at growth neutral. So it was a good report.
What about the prices paid index? I mean, we've been concerned about inflation.
It's still in there, Cindy, in our pipeline, and we're asking the supply managers to tell us about the price growth of products. Now these are commodities and supplies that they're buying, so it'll spill over into the broader economy later on, but right now it's still in the pipeline, and the index rose to almost 80, so this is quite significant. And if you balance that against what we've seen in prior years, and we've been doing this survey since 1994, so we get a good gauge on what's going on in my judgment. We're probably talking about an inflation reading for the overall economy, the CPI, for in 2010, it's going to be well above what the Federal Reserve would like to see. The Fed keeps telling us, "Oh, everything's well contained. Relax, folks. Everything it's good out there. Inflation's good." I don't think so. I think that in the pipeline, it's above what the Fed targets. Now, I still don't think it's certainly not to the 1980s level, but we're talking about inflation probably 3 to 4% by middle to the end of 2010.
What about inventories? We've been talking about that.
Interesting, for the first time since 2007 did we see the growth at this rate. In fact, this is the first time after 16 months of declining, we now got growth in the inventory, and as I said, this is the fastest growth we saw since 2006. So the inventory restocking is accounting for a lot of this, and as the GDP number came out for Q4 for the U.S., showing that the reductions in inventory had been, we saw some relief in that. In other words, they had continued to be come down, but not as fast. Well, what we're now seeing, and that's what we were seeing in our report, what we're now seeing is actually maybe some growth in inventories. Now the question is this anticipated growth? Is what the purchasing managers, supply managers want to see, or is it unplanned? My expectations and beliefs are that it's planned. So they're restocking, they're growing their production, and they're growing the inventories to support that production. So that's good as well. So looking at across the board, the report, that's one of the more interesting things that jumped out, and it jumped out, as I said, after 16 months of declining inventory, actually expanded.
Perhaps they're waiting until 2010 to, okay, this is the year we think we can do this.
I think so. And if you look at the employment report, this is the second time we've recorded increases. So January, the number was above growth neutral. February, now the jobs index, the employment index, above growth neutral. Again, this is the first time we've seen this since 2007. So you put it all together, we're seeing some new hiring there among these companies that we survey. And again, these are canaries in the coal mine. These are supply managers that are reporting for their companies. So if they're seeing job growth at their company level now, we'll see job growth later on for the economy. Now, I still expect this job growth to be not that strong. It's going to be much like what we saw in the last recession. Weak job recovery, unemployment rate that remains much too high.
What else about the report that you saw that was of interest as well?
Exports. Exports were up very significantly, and of course, as you and I have talked about in previous months, that's going to be an important factor driving the regional economy. That's the Mid-American economy. That's the 9 states that we survey, which depends significantly on exports, and that's growing. Of course, troubling in that, and we didn't ask them the question, what about the situation in Greece? What about the situation in Europe? What that's doing is strengthening the dollar, and that's not going to be good for exports. But right now, exports look good. Imports up fairly significantly. That's also to be expected. We asked the supply managers to tell us about what they're doing in international buying this year versus last year. About 35% reported that their international buying is higher than it was last year. Only 9% indicated lower than last year. So the dollar, despite its recent strength, the reduction in the value of the dollar has helped. Now I think we're going to have to watch that. I mean, it gets underplayed, it gets underreported. It's very important is what's going on internationally and what we see for buying in the international markets, and we're seeing more of that. And if the dollar strengthens, as I said, dramatically, now right now it's strengthening more than it should. I expect the dollar to decline in the rest of 2010. Well, if it doesn't, that's a problem. But I do expect it.
Okay, so looking ahead, March and April.
March and April, I think what we're going to see is more of a leveling out. I mean, this is the growth that we're seeing right now in our survey. I don't expect that to be replicated. I think it's we're getting a little ahead of ourselves, I think. Now, again, I'm not a supply manager. I'm reporting on what they're telling us. And I think we're going to see a report for the month of March. It's probably going to be still above growth neutral. Definitely expect it to be above growth neutral. Still pointing to growth, but a little bit less buoyant, a little less, little less air in it, if you will.
Not as robust.
Not as robust. Good point. Good statement. Yeah.
Okay. Anything else, Ernie?
Well, Cindy, the overall, all the factors look good. I mean, it was an odd report. I mean, odd in the sense that I didn't expect it. This is a report like what we were seeing back in 2006 and 2007. So, and that's, of course, the recession did not begin until December of 2007. So, there is certainly still the possibility of going back into a recession, but right now, it doesn't look like it.